But like Pankaj mentioned, it's earning seasons. We have a whole host of managements also lined up for you all. And now with us, we have the management of Jindal Steel joining in with us. We have Anurag Mantri, the Group CFO at Jindal Stainless Steel, joining with us this morning to decode the Q3 numbers, demand outlook for the second half of the year coming in as well. Thank you so much, Mr. Mantri, for joining in with us this afternoon on Markets at Noon on ET Now. And sir, I do want to start with one thing is that globally the demand has been quite tepid, but despite that the domestic demand has actually been strong. Now this also justifies the shift in your export-import mix as well. How do you expect the demand to shape up in the second half of the year?
Thanks, Vinny. So, as you rightly said, globally we are seeing in the key economies, we are seeing the recessionary trend, inflationary pressure, continuous aggressive Fed rate hikes. So all these are keeping demand on a subdued in the global markets. Stainless steel for India is a very good growth story. India is the fastest developing market, and stainless steel is the fastest growing metal across the world still, and India is the fastest growing market for stainless steel. So that's the reason if you see even in this quarter, we actually, despite the global pressures, we actually managed to capture the demand across segment in domestic market, which is auto, railway, infra, and the pipe and tube segment. So all these three actually has contributed us to almost highest ever domestic volumes of almost 95% in this quarter, which if you see quarter on quarter, we have still delivered almost 23% volume growth, which is one of the unique in the metal companies if you see in the quarter two earnings season. So overall, what we still feel that probably I think quarter three, quarter four are continue to be on these trends in terms of the similar volumes, and we expect that probably FY23, where our earlier guidance was almost 5 to 10% down from the FY22 volumes earlier based on the export duty and various other global factors. But now we expect at least FY23 volumes to be flat, and we will be able to achieve the FY22 volumes in FY23. And that's how quarter three, quarter four should look positive overall.
Pricing, what is the sense that you get? Have you seen better pricing coming into the next quarter? Because last two quarters it's all been about higher raw material prices and not being able to pass on.
You're absolutely right. So pricing wise, it's difficult to say at this stage. Overall, we are seeing what we are trying to de-risk ourselves from the commoditized space, and we are developing new grades and penetrating more and more into the segment which are either quality based segment, approval based segment, or a high premium grade segment like auto, railways, where we can actually capture with the same kind of premium grade, capture the better realization. So that's what our entire focus. If you see last 2 to 3 years, we have been focusing a lot on the product mix and reduce our exposure to the very highly commoditized market, which is marred by Chinese and Indonesian imports in the category, and distinguish ourselves more on a high premium grade and niche grades where we can actually capture the market. So with that, overall, we are expecting that we will be able to deliver the EBITDA guidance of 18,000, which we have always maintained for FY23. Despite all these challenges of the continuous imports and export duties, the market, but with the blended basis, what we are working as with a healthy product mix and portfolio mix, we will be able to deliver 18,000 rupees per ton of EBITDA margin in FY23.
Right. Mr. Mantri, one more thing is that the railway capex, that has been a big theme this year. Now, Indian Railways continued its thrust on increasing its share of the business in freight. Now, how did this benefit the company in quarter two, and how much of a benefit do you expect from this in the coming quarters as well?
Very good question, Vinny. I think railway has been very, very thrust area. In fact, post the budget Gati Shakti initiatives, and the railway, we are seeing a big puller for stainless steel on multiple fronts. One is that overall railway is increasing its share in the freight business, which is pulling the wagon demands, which is one of the key stainless steel user sector. Second is this all entire Vande Bharat trains, which are entirely made of stainless steel, which is also expected to pull up the good demand. Which should that metro, I think there is a huge investment of almost 80,000 crore in next 5 years has been announced for in the various metros, and metro.
Right. In terms of what's really happening in terms of demand, can you just tell us? Because
That's also going to be a good demand.
yeah, got the point.
Demand in the sense of railway.
Yeah, so I was just going to tell you that.
Demand.
Yeah, I was just coming and completing the question that can you talk to us about demand? Because, you know, as soon as you take price hike, prices become normal. We are seeing domestic demand is good. But what is the sense that you get from global demand like Europe and US, and what sort of impact will it have on prices in India?
See, Europe and US demand are under pressure right now, and it's difficult to predict. But expectation is that Q4 onwards, those markets should also start opening up. But it's difficult to predict. But domestic side, I can tell you that stainless steel, because of the various demand puller like railways, you mentioned, the autos which are coming up, which are the new uses of the stainless steel, which are actually getting traction. We have a very strong foothold. We have a quality, because we actually operate in a very quality segment. So we have approved quality for all the across the auto, railways, the infra segments, which is expected to continue strong. In fact, India is still being catered by almost 30 to 40% by imports. So we continue to see a good demand and space into Indian market, which we will continue to capture, and more and more gradually Indian customer psyche is also moving towards the quality product, which should also benefit us, because our space is really not to compete on price but more on a quality commitments and giving the quality products.
Okay, Mr. Mantri, thank you so much for joining in with us this afternoon on Markets at Noon, giving us an insight of what we should be expecting from the company going ahead. That was the management of Jindal Stainless Steel for you all. But on that note, we're going to slip into a very short break.